Today we'll discuss gifts that cost you nothing now, ways of helping AKU and the other nonprofit organizations about which you care in the future. These are chiefly ways people in the US and Canada can give, but people in many other countries can give in these ways too. I'll return to this point at the end. We all have causes about which we care deeply. Spreading and enhancing education, improving healthcare, alleviating poverty, protecting the environment, supporting the arts, and so on.
3, 1, 5, 6, 0.
As individuals, we have limited resources. So the question becomes, how do we care for our own and our family's needs while also supporting the causes about which we care passionately? Nonprofit organizations certainly need our help now, especially with this crisis, but they'll also need our help in the future. So, how can we help nonprofit organizations in the future in ways that cost us nothing now? There are a number of simple ways to do this. The first, what might be called mode of future giving, we'll discuss is a will or living trust. What you find is that in their will, people tend to include only the organizations that are most important to them. A person who supports, say, 10 to 15 organizations a year with small gifts will have only a few organizations in her will. Those are the organizations that mean the most to her. You include an organization in your will or living trust by means of a bequest intention or bequest provision. There are two kinds of bequest provisions. One kind is a specific bequest. This is simply a gift of a specific amount, say $10,000. Another kind is a percentage of the residuary estate. The residuary estate is simply the assets remaining in the estate after all specific bequests, for instance, to family members, have been paid. Most donors do the second. That way, the size of the gift fluctuates with the value of their assets. They're not locked into a certain amount. Now, let's say that Amina is a widow with 3 children and has an estate of $1 million. This is a highly simplified estate. It does not include Amina's personal property, such as her house, the executor's fee, the attorney's fee, taxes, and so on. So, Amina has a number of specific bequests. She will leave $50,000 to her niece Aisha, $50,000 to her nephew Hanif, $25,000 to Johns Hopkins University, where she did some of her graduate work, and $10,000 to World Vision Canada. This leaves a residuary estate of $865,000. Of that amount, she will leave 20% to each of her 3 children. Usually, bequests from a residuary estate are expressed as a percentage, and she will leave 40% to AKU. I'd like to make a critical point. The amounts that Amina leaves to nonprofit organizations will not be taxed, but the amounts she leaves to individuals, that for here, her niece, her nephew, and her children, might well be taxed. A volunteer with the AKU, Zahir, has made the university a beneficiary of his residuary estate. To preserve his anonymity, Zahir asked that I not use his last name. I so wish I had time to tell you about Zahir's remarkable and admirable life. In short, it's been a life of giving, of helping others in many countries. His future gift will create an endowed fund supporting education, research, and teaching. I'll say more on endowed funds in a bit. So, why will Zahir make such a wonderful gift? He said, I come from a very humble background, but have been blessed with numerous successes. My education has played a critical role in the quality of my life, and I wish the same for the rest of humanity, and hence my gift. I want the magnificent work of AKU to continue beyond my physical life in this world. A former provost of AKU, Robert Baker, has a specific bequest in his will to create an endowed scholarship fund. I'll tell you more about Robert's gift in just a bit. I'd also like to give an example from Princeton University. When I worked at Princeton, an alumnus bequeathed the whole of his residuary estate to the university. He had been a diplomat in the US Foreign Service, had never married, and had lived quite frugally. He had majored in British literature at Princeton. His bequest funded a professorship or a chair in British literature. By the way, 1/3 of all the gifts Princeton receives each year are like this. They're gifts that cost the alumni nothing during their lifetime. You can also make a gift to charity from your retirement plan. In the US, the most common plans are IRAs and 401ks. In Canada, RRSPs and RRIFs. You must list the beneficiaries of your retirement plan. That is, who will receive what remains in the plan after you and your spouse pass away. You can also make one or more charities the beneficiaries. It's quite easy to add or change a beneficiary. You can do this online. It takes only about 15 minutes or so. I'd like to stress that the charity receives its portion of the retirement plan only after you and your spouse pass away. Let's say that Amina has $1 million in her IRA. Now, beneficiary designations from a retirement plan are usually, as with the residuary estate, expressed as a percentage. So she's going to leave, of the $1 million, she's going to leave 10% to the University of Chicago, where she also did graduate work, 20% to the Edie Foundation in Pakistan, 20% to the Citizens Foundation, TCF, also in Pakistan, and 30% to AKU. And she's going to leave 10% to each of her children. Now, I'd like to make a really critical point about leaving funds in a retirement plan to individuals, to people. In both the US and Canada, funds left to individuals from a retirement plan are very heavily taxed. Over half could be lost to taxes. Indeed, in some states in the US, over 70% will be lost to taxes. A Sonam alumna, Ghazala Kabani, and her husband, Aziz Nathu, will make AKU the beneficiary of their retirement plan. Ghazala is with a startup developing treatments for fungal diseases. She's also pioneering with AKU on clinical trials in Pakistan. Aziz is the founder of a wonderful nonprofit organization that promotes interfaith discussion. Tomorrow, Aziz will have a large virtual conference, and he's asked me to speak on AKU and the other AKDN agencies, to which I so look forward. Their future gift will create an endowed scholarship fund for our nursing students. This is part of what Ghazala and Aziz said about the reasons for their future gift. Our financial DNA is part of AKU's DNA. Our footprint in the world, our largesse, is infused with the work of AKU, which will live on eternally. AKU can do far more than we can. If even one of the students does good in this world, that will more than pay us back. We are thrilled to be able to contribute to the university in this fashion. A wonderfully poetic couple. You can also make a charity the beneficiary of your life insurance policy. There are two ways to do this. You can make the charity the beneficiary of all or a percentage of the policy. For instance, you could designate that your children receive 50% of what is called the death benefit and the charity 50%. Or you can make the charity the owner and beneficiary of the policy. If you do this, you'll receive an income tax charitable deduction equal to the value of the policy. Life insurance is a particularly efficient gift for younger donors because the younger you are, the lower the cost of the policy, the lower the premiums. Now, let's say the death benefit of Amina's life insurance policy is $500,000. Now, as with retirement plan, beneficiary designations from a life insurance policy are usually expressed as a percentage. So she's leaving 25% to each of her children and 25% to AKU. Now, here again, in both the US and Canada, the amounts left to individuals, amounts left to people, will be included in the taxable estate. And I'll say more on that in just a moment. So, Amin Noorani is a former AKU administrator who has made the university the beneficiary of a life insurance policy. Amin is wonderfully philanthropic. He has, for instance, founded a Montessori school in Karachi. His future gift to AKU will create an endowed fund that will support early childhood education, poverty alleviation, and other causes. Now, this is the reason Amin, who is both a chartered accountant and a CPA, gives for his future gift. I always believe in achieving a win-win. With the life insurance policy, I had two options: to pass the policy on to my children or to donate it to charity. I found a middle way. The policy goes to AKU, and the tax benefit in Canada goes to my children. Now, Amin lives in Canada. What he means is that his estate will receive a credit for the amount of the gift. That is the amount of the death benefit of the life insurance policy. That credit can be claimed against the estate's income, his estate's income, in the year of death. Any excess can be carried back 1 year. A gift in life insurance can also reduce taxes in the US, although it works somewhat differently here. When I worked at Vassar College, an alumna made Vassar the owner and beneficiary of her life insurance policy. Every year, she'd make a gift of $10,000 to Vassar, and the college would use that money to pay the premium on the life insurance policy. So every year, she would receive a charitable deduction of $10,000 because she wasn't giving the money to the life insurance policy, she was giving the money to a university, to college, a nonprofit organization. Now, one can give other assets in the future as well. One can give what is called real property or real estate. One can also give personal property. A bit more on each of these. You can leave a nonprofit organization your primary residence, a vacation home, or even a commercial building. For instance, a donor has given AKU a house in Karachi. I'm delighted to say that that house will soon be our president's new residence. You can also leave personal property such as a valuable painting, jewelry, antiques, and rare books and manuscripts. The Vassar alumna I just mentioned will also leave the college's museum her valuable collection of Japanese porcelains. I'd like to make a really critical point. All of these arrangements are perfectly revocable. You can change them if you need to, if your circumstances change. None of these arrangements is carved in stone. I'd also like to stress that before making any of the gifts we've discussed today, you should consult your financial advisor. This is because an estate plan is holistic. It takes into account your spouse, your children, and the whole of your assets. So you must think your plans through with great care. So, what will the nonprofit organization do with your future gift? The organization will do with your gift precisely what you ask. It will spend the funds on either an immediate need or on the program or initiative that's most important to you. If your gift is sufficiently large, you can ask that the organization create an endowed fund that will support a program or initiative forever. Your endowed fund will be part of the organization's general endowment. The endowment is the investment portfolio of the organization. The income from the endowment supports everything the organization does. Your endowed fund, like the endowment as a whole, will pay out approximately 5% of its value each and every year. any growth over 5% will be reinvested in the fund. That means that the fund will grow and grow over time, thus increasing the good it does. Since an endowed fund exists forever, it's a great way to make a lasting impact. The fund can be named after you, your family, or someone else you would like to honor and memorialize. At AKU, you could create an endowed fund supporting patient welfare, pediatrics, maternal health, breast cancer research, a library collection, financial aid, or even, as we have seen at Princeton, an academic position. The possibilities are truly endless. As I mentioned, the bequest of Robert Baker, our former provost, will create an endowed scholarship fund for AKU students with financial need. This is why Robert chose to create an endowed scholarship fund. Quite simply, this decision reflects the fact that my years at AKU were the most challenging and rewarding of my professional career. My decision to focus on student support reflects the great respect I developed for the talented and committed students I met at AKU, many from disadvantaged backgrounds, but with skills that blossomed in the supportive AKU environment. Robert wrote a wonderful piece on his gift. If you'd like to read the whole piece, please visit the gift planning pages of our website. It's a wonderful piece that he penned. A further word on endowments. The oldest institutions in the world are universities. They outlast corporations, dynasties, and even countries. This is the great Al-Azhar University in Cairo, which the Fatimids created over 1,000 years ago. And the University of Bologna in Italy is 900 years old. Oxford is 900. The University of Paris is 800, and on and on. But universities can endure and be of high quality only if they have a large endowment. Let me give Princeton as an example. This chart is not nearly so complex as it might seem. This chart simply shows the sources of Princeton's operating budget as a percentage of the total, and you see that on the y-axis, over the last 30 years or so. As you see, almost all the lines, tuition fees, government foundation grants, annual gifts, and so on, are flat. Only one line goes up, the green line. That line is the income from Princeton's endowment. Princeton's annual operating budget is $2 billion. Half of that, now comes from the endowment. You can create an endowed fund with an outright gift now, and then add to it with one of the future gifts we've discussed today. This is called a blended gift. Blended gifts are a great way to build an endowed fund over time. Many alumni classes have created endowed funds. An alumnus or alumna could most certainly have his or her future gift flow, into the class's endowed fund. Tamina Shasnazar is from Afghanistan. She graduated from AKU in 2018 with a BSCN. Tamina is from a poor family, and there was quite a lot of opposition to her pursuing higher education. Scholarships covered the entire cost of that education. She hopes to use her education to empower Afghan women, to teach them about their health and their rights. Miriam Ali was on the verge of heart failure when she arrived at AKU. Our pediatric cardiology team performed complex surgery to repair a valve in Miriam's heart. She was one of the younger patients in Pakistan ever to undergo this procedure. Our patient welfare program covered the entire cost of her treatment. And this is our wonderful Dr. Babar Hassan, who has saved the lives of thousands upon thousands of children. Simply to review the gifts that cost you nothing now. These are gifts from a gift from a will or living trust, a gift from a retirement plan, a gift of life insurance, or a gift of real estate or personal property. If you do make AKU the beneficiary of one of these gifts, we hope you'll share that wonderful news with us. We'd so like to welcome you into our new gift planning society. The society is our way of honoring and recognizing donors who will make a future gift to AKU. The members of the society will be listed in our annual report of gifts, will receive pens and other items with the society's logo, and will be invited to special events for society members. Now, AKU is now in an endowment campaign. We hope to more than double our endowment, to increase it by $220 million. I am delighted to say that the trustees have approved our counting all documented future gifts toward that goal of $220 million. We have a very simple form by which you can document your future gift to AKU. I'd like to end with a quote from our Chancellor, His Highness the Aga Khan. His Highness said, "Developing a new university into an effective and respective center of learning demands a far greater span of commitment and time than can ever be available from one man's views, one man's resources, and the allotted years of one man's life. The university must have a large endowment. Otherwise, it will be merely like a passing comet, which illuminates the sky for a few seconds of eternity and then is gone." Such a wonderful quote. So, these are the few of the ways you can make the world better, but while also taking care of your family. I do hope you found this helpful. If you have any questions at all on such gifts in a country other than the US or Canada, please do email me. Indeed, if you have any questions at all, please do email me. I'd now be delighted to answer any questions you might have. Thank you.